Warren Buffett just sold 13% of Apple stake, and it has Wall Street panicking. Buffett just announced this at his annual shareholders meeting, and people are shocked. This comes after Apple's earnings last week, which Tim Cook announced a $110 billion buyback, their largest ever. They had a double beat, but iPhone sales fell 10%. Not only that, but they had a 4% drop in sales, and in Greater China, it was an 8% drop. So let's see what Warren Buffett has to say explaining why he sold his stake. And I did a valuation video on Apple, so if you'd like to watch that, it will be this week. And basically, I just say that Apple is really not innovating as much as it should be, and the revenue hasn't been that great for the past few years. We need to see a lot more growth, otherwise it's going to become a stalwart.
Last year, you mentioned Coca-Cola and American Express being Berkshire's two long-duration partial ownership positions. Have you or your investment managers' views of the economics of Apple's business or its attractiveness as an investment changed since Berkshire first invested in 2016?
I would say that at the end of the year, I would think it extremely likely that Apple is the largest common stock holding we have now.
And just to give some context on this, Apple did rise 40% last year, so he is up to a very high exposure in Apple. He's seen tremendous growth in his portfolio and in Berkshire stock, and he just sold 13% of Apple stock, which he now holds in cash. He holds more than $182 billion in cash.
When we own a Dairy Queen or we own whatever it may be, we look at that as a business, and when we own Coca-Cola, or American Express or Apple, we look at that as a business. We always look at every stock as a business, and we have no attempt made to predict markets. We have no attempt made to pick stocks. I went through many, many years doing the wrong thing.
He looks at businesses, he doesn't look at stock prices, so he's thinking in terms of a business owner, which is something that a lot of investors think that he's evading this question, but I think he's just trying to acknowledge that he has a different mindset of why he sold Apple. He wasn't looking at short-term prospects, he wasn't looking at trades, looking at it more from a long-term business perspective.
If you look at stocks as a business and treat the market as something that doesn't tell you, isn't there to instruct you, but it's there to serve you, you'll do a lot better over time.
So he's saying that Apple is a terrific business. He's not looking at stock prices going up and down. Investors should be looking more long-term like that and thinking more as business owners rather than as stock traders. He also wants a little bit of cash.
We don't mind paying taxes at Berkshire. They can change that percentage any year, and the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies, I think that something has to give, and I think that higher taxes.
So the Apple stock that he sold was at a 21% tax rate. That is part of Biden's economic plan. He does want to raise taxes. He's saying the government spending is out of control and very likely to happen. And he's a little bit worried that the tax rate is going to go up in the future.
They may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. I would really hope with all that America's done for all of you, it shouldn't bother you that we do it. And if I'm doing it at 21% this year and we're doing it at a higher percentage later on, I don't think you'll actually mind the fact that we sold a little Apple this year.
So that's a very interesting point. So he's saying that there is going to be higher taxes because Biden is proposing higher taxes for this year and possibly the next year because government spending is out of control. That he sold 13% of Apple stake because he has a 21% tax rate and he's expecting that to go higher. And he's saying the fundamentals of the business is showing that it's still a great, bulletproof, wonderful business. Having said that, I also think it is his number one holding. He has a very large exposure to it, so he's just decreasing a little bit of that exposure which is why he didn't sell, Coca-Cola or American Express. And also Apple went up exorbitantly last year, so I think he just wanted to trim a little bit of it, and this was the one company that he felt comfortable trimming because it is such a large position for him. And he goes on later to say that he's very happy to have the cash. He can't really deploy it anywhere else because he doesn't see where anything can be allocated appropriately. He doesn't see another place for his cash to get better than 5.4%. So it does appear that he thinks that the market is overvalued as a whole, so it's good for him to trim a little bit. But what are your thoughts? What do you think about the Apple's earnings, about what Warren Buffett said? Let me know in the comments below.